One of the most important parts of trading psychology is trade management. In other words, what you do while you're in a trade. And what you do while you're in a trade will determine whether if you're going to lose that trade, win that trade, get the full benefits of that trade, etc. You name it. So in this video, we'll talk about exactly how you should be managing your trading psychology while in a trade and how to better improve your trade management overall. You ready? Let's go. All right, guys, welcome back to the video. Today, we're going to talk about trade management and what we do while we're in a trade. There's a couple of things we need to make sure we put into practice in order to be successful in this phase of trading. So, number one, you want to trust your stop loss. Now, this could be very dependent. If you are somebody who has a set stop loss in mind, meaning I'm only going to risk 20 pips for every trade or 30 pips for every trade, this may not work for you. And this is why. When you are placing a stop loss, which should be determined before you actually enter a trade anyway, but when you are placing a stop loss, it should be placed based on the structure. Meaning I should be placing my stop loss somewhere outside of consolidation, somewhere where I know for sure that if price hits this area, then for sure this has invalidated the trade and I was wrong on this trade. That's where your stop loss should be. Now, that could vary. It could be 20 pips. It could be 40 pips. It could be 60 pips. Believe it or not, depending on the trade, it could even be 100 pips, especially for some indices. So your stop loss needs to make sense when it comes to structure. It has to be in an area where it completely invalidates the trade, thereby allowing you to just trust your stop loss and allow the trade to play out. And if it hits your stop loss, then you were wrong, and that's okay. But at least I know by placing my stop loss this way, if I'm wrong, I'm completely wrong about this trade versus cutting my stop loss short at having a set stop loss at like 20, 30 pips, when in reality, I would have just been in 20 to 30 pip drawdown before the move really took off to the upside. Set your stop loss the correct way so that moving forward into the trade, you can fully trust your stop loss. Number two, when we talk about trade management, now that your stop loss is set, the next thing is your TP. Now, TP could be variable. You can have a set TP based on structure and based on where you see the overall move going. But if you're not necessarily an intraday / swing trader, you might be scalping for just a couple pips. So that being said, while I'm in profit, I only want to close a trade if I see a serious threat to the continuation of that move. Now, the serious threat is what is variable here. Everybody sees a serious threat differently. And to be honest, it is going to take some experience before you start understanding what actually is a serious threat to the continuation of a move. But one of the things could be lack of volume. Sometimes we enter trades at wrong times and we don't have enough volume to push us forward to the actual TP that we had originally set. In that case, if we see volume seriously dying out, then we may want to consider closing at the profit target that we have set up, or making sure that we close the trade at break even to make sure that we don't get any loss on that trade. Another example of a serious threat is if you're in a buy move and you're approaching a serious area of resistance. Maybe your TP is at a bigger area of resistance that's beyond that particular area that you're facing. But if you're at a particular area of resistance on a lower time frame and price seems to be struggling and you're seeing wicks along that area, you may want to consider closing there. And then if price breaks beyond that area, you then might want to re-enter that trade. That might be a way of making sure that you're playing it safe, but at the same time, taking as much capital as you possibly can. So as you can see, when it comes to the take profit, we don't necessarily treat it exactly like the stop loss. With the stop loss, we've already set where we believe the trade is invalidated. But when it comes to profit now, we can't really say this profit invalidates this profit. Profit is profit. So that being said, you want to make sure that you're securing yourself as much as possible to capitalize on as much profit as possible. Now, as you gain more experience as a trader, you'll learn if you should be holding trades a little longer, or if you're just going to go for a set amount of pips. If you're a scalper, like 20, 30 pips, you'll learn what's best for you. But either way, for a beginner, what's important is that you're managing your trade and mitigating those losses by making sure you take profit at areas where it seems like there's a serious threat to the continuation, or you close at break even to make sure that you don't incur loss at all. Next thing you want to do, get used to using a trailing stop. A trailing stop is a moving stop loss that you set in increments based on the amount of pips that you feel that your stop loss should be at all times. For example, if I always want to have a 30 pip cushion and I set my trailing stop to 30 pips, what's going to happen is, let's say, for example, my stop loss is at 40 pips and I went up 30 pips in profit. Because I have a 30 pip trailing stop, then my stop loss will move from 40 pips below break even to break even. Because from break even to where current price is a difference of 30 pips. Meaning for this trade, I am now secured and I will not lose money for this trade. And this continues on as you move up in profit. If you're 35 pips in profit, then your trailing stop is going to move you up into 5 pips profit. If you are 50 pips in profit on the trade, then your trailing stop is going to move your stop loss up 20 pips beyond the entry price. So that being said, being up 50 pips and having a 30 pip trailing stop allows you to have a 20 pip cushion so that even if price reverses, you'll still close out in profit for 20 pips. This is a very seamless way to not only allow your trade to have enough room for fluctuation, but also not have to worry about watching the trade 24/7 in order to move your stop loss manually each and every time. This is a great tool to use and really helps you in your trading psychology. Now, if you want to use a trailing stop, you will have to use it through your MT4 platform on your computer. So you will have to set it that way on the MT4 or the MT5 terminal. But after you've done that, you can just continue to watch a trade on your phone and you're good to go. The last thing you want to do to help your trading psychology while you're in a trade, you may not want to watch the trade. Now, everybody is different. Some people are scalpers, like I said, and they do probably want to watch the trade because their moves are just 10 to 20 pips maybe, and they want to just make sure that they capitalize on it on a volume push, and that will require for them to watch that trade. But some of you are going for longer moves, and you watching the trade increases the level of stress for you. And let's just say, for example, after going over your trades, you realize you tend to cut your trade short because you're nervous of the trade reversing, or you're just nervous that you're going to lose this trade. If that's the case, then it's possible that you have anxiety while you're in a trade, and watching it is not going to help you whatsoever. It may be best for you to not watch the trade and replace that time doing something else. Find something else to do that doesn't have to do with trading and step away from the charts. Allow the move to play out, and every once in a while you can take a peek to see where the move is at, but other than that, you try to ignore it as much as possible. All of these things can be very helpful in improving your trading psychology and overall trade management. So let's make an effort to get better at our trade management, because if we do, we'll be that much closer to becoming great traders. So I hope you gain value in this video. Please like, share, and subscribe. And until next time, Jordan the Maestro, peace.